Is gold really the safe haven we believe it to be? For Chinese citizens, the answer might surprise you. Imagine you're stocking up on supplies for a storm. You'd think gold, being a timeless and valuable resource, would be the best choice to secure your future, right? But for Chinese citizens, things aren't as straightforward as they might seem. Let's think about this like preparing for a typhoon. If the government suddenly decides to take control of all bottled water and canned food, your stash might not be as safe as you thought. China has a unique set of rules and historical actions when it comes to gold ownership. Just like in the 1930s when the US government took citizens' gold to combat the Great Depression, China could take similar drastic measures. Currently, if you buy more than 20,000 renminbi worth of gold, you have to show your ID. This isn't just a minor inconvenience, it's a way for the government to keep tabs on who has large amounts of gold. Why does this matter? Well, in tough times, the government could demand that citizens hand over their gold to support the economy. Imagine buying a safety net only to have it taken away when you need it most. This kind of scenario isn't just theoretical. Countries have done it before, and with China's increasing control over its financial systems, it's a real possibility. In this video, we'll break down the reasons behind these regulations and what they could mean for you. We'll also look at some real-life examples and alternatives that might offer better security for your savings. So, stick around to learn why gold might not be the golden ticket during tough times in China. Let's take a step back and look at history. During the Great Depression in the 1930s, the US government did something drastic. They confiscated gold from its citizens. President Franklin D. Roosevelt issued Executive Order 6102, which required Americans to hand over their gold to the Federal Reserve. The aim was to stabilize the economy by increasing the money supply. People were compensated, but the move showed how governments can control personal assets during crises. China has a similar history of stringent controls over precious metals and other valuable assets. During the Cultural Revolution, the government aggressively seized gold, silver, foreign currency, and other valuable items from citizens to consolidate state power and eliminate private wealth. This was part of broader efforts to enforce communist ideology and support state-run initiatives. The authorities conducted raids and encouraged citizens to report those who were hiding valuable items. People who were found with hidden valuables often faced severe punishments, including imprisonment. In more recent times, there have been instances where the Chinese government imposed restrictions on withdrawing deposits. For example, during the economic reforms in the late 20th century, there were periods when bank withdrawals were heavily regulated to prevent capital flight and maintain financial stability. More recently, in 2020, there were reports of localized restrictions on bank withdrawals in Hunan province amid concerns about bank runs and financial instability. This highlighted the government's readiness to impose stringent measures to control the flow of money and protect the banking system. Furthermore, during the Great Leap Forward and subsequent famines, the government not only controlled food supplies but also confiscated private property, including valuables, to support state policies and redistribution efforts. These historical actions show a pattern of the Chinese government asserting control over personal assets during times of economic or political turmoil. Understanding these historical precedents helps us see why similar actions could be taken in today's China. When the economy is under stress or there's a threat of war, the government might decide to take control of gold reserves again. Currently, if you buy more than 20,000 renminbi worth of gold in China, you need to provide identification. This regulation isn't just about preventing money laundering. It's also about allowing the government to track who owns significant amounts of gold. If the economy were to deteriorate significantly, the government might use this information to confiscate gold to stabilize the financial system, just like in the past. These historical and current examples show us that in China, the safety of your gold isn't guaranteed during tough times. It's like keeping your valuables in a locked box but knowing someone else has the key and can take them whenever they want. By examining these historical and present-day contexts, we can better understand the risks involved with owning gold in China during periods of economic instability or wartime. In China, purchasing more than 20,000 renminbi worth of gold requires providing identification. This regulation is part of a broader effort by the Chinese government to monitor and control the flow of precious metals. By requiring identification, the government can track who is buying large amounts of gold and potentially prevent illicit activities such as money laundering. This isn't just about stopping crime, it's also a way to keep an eye on significant financial transactions that might affect the economy. This identification requirement allows the government to track and potentially control the flow of gold. Imagine it like a security system in a large building. You need a key card to access certain areas. By knowing who has access to gold, the government can act quickly if they need to. For example, if the economy takes a downturn, the government might decide to confiscate gold to stabilize the financial system, just as they have done with other assets in the past. In addition to monitoring gold purchases, the government also keeps an eye on large transactions more generally. For instance, the government has strict regulations on foreign currency exchanges and large bank withdrawals. There have been instances where people found it difficult to withdraw large amounts of money from their own accounts during times of financial instability. This shows how the government prioritizes maintaining control over financial assets to prevent economic turmoil. These measures are part of a broader strategy to maintain economic stability. By tracking large transactions and monitoring who owns significant amounts of gold, the government can implement policies to address financial issues swiftly. This level of control can be reassuring during stable times, but raises concerns about personal financial security during economic crises. It's like knowing that the safety net is there, but also knowing that it can be pulled away if the situation demands it. So, while gold might seem like a safe investment, in China, the added layer of government oversight and the potential for asset confiscation during tough times make it a more complex and risky option. During economic downturns or times of war, governments often take drastic measures to stabilize their economies. For example, during the 2008 financial crisis, the U.S. government bailed out major banks and automotive companies to prevent a total collapse of the financial system. Similarly, in Argentina, the government has frozen bank accounts and restricted withdrawals to control hyperinflation and stabilize the economy. These actions show how governments can intervene in the economy by taking control of valuable assets. If the economy worsens, the Chinese government might require citizens to hand over their gold. This isn't just a theoretical scenario. China has a history of such actions. During the Cultural Revolution, the government confiscated gold, foreign currency, and other valuables to support state policies. More recently, in times of financial stress, there have been instances where people faced difficulties withdrawing large amounts of cash from their bank accounts. The idea here is that in a severe economic crisis, the government might need to bolster its reserves quickly. Gold, being a universally recognized store of value, could be a prime target. By requiring identification for large gold purchases, the government already has a system in place to track who owns significant amounts of gold. This makes it easier for them to implement a confiscation policy if needed. For example, in Venezuela, the government has been known to take drastic measures to control assets during their economic crisis. Similarly, in China, if the economic situation became dire, citizens might be asked to hand over their gold to support national financial stability. It's like keeping your valuables in a safe, but knowing that in a crisis, the authorities could demand access to that safe. So, while gold might seem like a secure investment, in China, the potential for government confiscation during tough times adds a layer of risk that can't be ignored. Confiscated gold can bolster government reserves, providing a financial cushion during tough times. For instance, if the economy is struggling, the government can use gold to stabilize the currency, pay off international debts, or back new financial policies. This was seen in the U.S. during the Great Depression when the government confiscated gold to increase the money supply and support the dollar. By having more gold reserves, the government can reassure investors and the international community about the country's financial stability. In China, the government has been actively increasing its gold reserves over the past few years. They see gold as a way to diversify their foreign exchange reserves away from the U.S. dollar. If the Chinese economy were to face a severe crisis, having a significant amount of gold could help them manage the situation better, just as gold reserves have historically provided a safety net for various governments. This potential risk may deter citizens from buying gold, pushing them to find alternative ways to safeguard their wealth. When people know there's a chance the government could confiscate their gold, they might look for other investments that are less likely to be seized. For example, during the Cultural Revolution, many Chinese citizens lost trust in holding valuables like gold and instead looked for other ways to preserve their wealth. In modern times, this could mean more people investing in real estate, foreign currencies, or digital assets like cryptocurrencies. However, each of these alternatives comes with its own risks and challenges. Real estate might be less liquid, foreign currencies can be volatile, and digital assets are subject to regulatory changes. For instance, in Argentina, people often turn to US dollars to protect their savings from inflation and government control. Similarly, in China, the fear of potential confiscation can lead people to diversify their investments, spreading their risk across different asset classes to avoid having all their wealth tied up in something that could be taken away. This shift in financial strategy shows how government policies can significantly impact personal finance decisions. People naturally seek to protect their hard-earned money, and understanding the potential risks of gold confiscation is crucial in making informed investment choices. By looking at these strategic and economic implications, we see a complex relationship between government actions and individual financial strategies. It highlights the importance of being aware of the broader economic context when making investment decisions. Diversifying investments can be a safer strategy. Instead of putting all your money into one type of asset, spreading it across various investments can reduce risk. Given the current economic situation in China, let's consider some alternatives like foreign currencies and digital currencies. Investing in foreign currencies can help protect your wealth from domestic economic instability. For example, many people in countries with high inflation, like Argentina, buy US dollars to preserve their savings. However, in China, it's crucial to consider that holding large amounts of foreign currency within the country can be risky due to potential government interventions. To mitigate this risk, it's advisable to keep foreign currency investments overseas, where they are less likely to be confiscated or restricted by the Chinese government. The main advantage is that strong foreign currencies tend to be more stable than a weakening domestic currency. However, currency values can be volatile and influenced by international events and policies. Digital currencies like Bitcoin and Ethereum have gained popularity as alternative investments. They offer the potential for high returns and are not tied to any government, which can make them appealing during times of economic instability. Bitcoin, in particular, is seen by many as a digital gold because of its limited supply and decentralized nature. This makes it a potentially safer investment compared to traditional assets that can be more easily controlled or confiscated by governments. The crypto market is highly volatile, and prices can swing dramatically in short periods. Additionally, regulatory environments for digital currencies are still evolving, which means that new laws and regulations could impact their value and accessibility. For example, China's government has imposed strict regulations on cryptocurrency trading and mining, but holding digital currencies securely in personal wallets can still be a viable option. Given the current economic situation in China, real estate might not be the ideal asset due to market volatility and recent government crackdowns on the sector. Foreign currencies can be a safer bet if kept overseas to avoid potential confiscation. Meanwhile, digital currencies like Bitcoin offer a decentralized alternative that could protect your wealth from government intervention. Diversifying your investments across these options can provide a more secure financial future, ensuring that your assets are protected in various ways. In summary, historical precedents, current regulations, and the potential for government action make gold a risky investment during economic hardships or war. We've seen how in the past, both in China and other countries, governments have confiscated gold and other assets to stabilize their economies. Currently, the regulations in China require identification for large gold purchases, allowing the government to monitor and control significant transactions. This, combined with the possibility of future confiscations, makes gold a less secure option for safeguarding your wealth during uncertain times. In uncertain times, where will you place your trust and wealth? It's a question every investor must consider, especially given the unique risks in different financial environments. What do you think is the best way to protect your wealth during economic crises?